So how you guys doing today? Today we'll be talking about trend lines, right? Once again, every training is I'm gonna make it simple. Um, Trading should not be complicated. We're gonna be looking at the charts with pure simplicity, right? So once again, today's training is about trend line. This is a trend line training, right? So what is a trend line? Let's start off with that. A trend line is a straight line that connects two or more price points, then extends into the future to act as a line of support and resistance, right? So before even going further on the charts that the diagram over here, today we're going to be discussing what we're going to be covering is how to draw a trend line, how to confirm an uptrend and a downtrend, and understanding of a trend and its manipulation, right? And its manipulation. All right, this is what we're going to be covering today. Once again, this training is going to be simple. I'm not going to overcomplicate it. Trading should be overcomplicated, all right? So in the market, there's three types of trend. We have an uptrend, a downtrend, and a sideways market, which is that we call consolidation, which is a market that everyone is told to stay away from, right? Now, not on this training, but later on, I will be discussing how you can profit off this market, right? Because once price is moving, you can always make money, right? Keep that in mind. But for the sake of this training, we're just going to focus on an uptrend and a downtrend. We're not going to focus on the consolidation, right? I will show you what it looks like and what to stay away from. Okay, why to stay away from it. But let's get into it. So an uptrend, right? One of the things that I want you guys to understand is that when you're looking at a trend line, the trend line, you got to imagine that it's connecting data points, right? So what is an uptrend? An uptrend, if I can get my tool here, give me 1 second. An uptrend is when you start having higher lows. So we have a high, a low. Use a different color. Yeah, I'm sorry guys. Let me just use a different color for this. Because okay, use black actually. All right. So you start having higher highs. An uptrend is when you start having higher highs, guys. Higher highs. Okay. Now, what is a downtrend? A downtrend is when you starting to have lower highs, right? Or lower lows. You start to have lower lows, right? So let's label that. So you guys could, so we have a low here, and then we have a high right here. And then, oh shit, what just happened? Okay. And then we have I'm gonna put it as a double H, right? But a higher high. Once again, and another higher high. So that is when you start noticing an uptrend, right? We started having higher highs in the market. We start having a downtrend, and I'm gonna just color coded this so we understand. So I'm gonna use blue to represent that price is going upwards, right? And then I'm gonna use red to represent that price is going downwards, okay? So we can have, but I also have the arrow drew up there so you know what direction we're looking at. So when a downtrend, we started having lower highs, okay? First, this is a low. So I said lower highs, sorry. Lower highs is true, but we focus more on the lows. And I'm gonna explain why we focus more on the low, okay? And not the lower high itself, right? On that, and then we have a lower low. A lower low, right? So that is what we look at when we're looking for the trend of the market. Now, when we draw up in a trend, when we draw in a trend line, as mentioned in the definition, you want to look at the first two data points. We look at these low points as data points, right? And once you connect the trend lines of that, you can extend it, right? And when you extend it, it's an area or you're predicting an area where price may hit and reject from, right? Now, keep in mind, trading line is subjective, and I will be reviewing that later on the charts. It's the same thing when we're looking at a downtrend, right? When we're looking at a downtrend, one thing you want to pay attention is the lows, right? We're starting to have lower lows. Now, when we draw a downtrend, we look at the lower highs, right? These areas on a downtrend to connect the data point, right? And it's the same concept, guys. Whenever price touch that second data point, right? You're looking for it to, you draw it out, and it's a point of reversal in the future. Okay. So it's again uptrend, and I should actually put this here as well, because this also matters, right? Gonna have a low, and then you're gonna have a lower low. I mean a higher low. Sorry, I keep twisting up my words, guys. I'm sorry. Higher low. Okay. And the same when you look at here. Well, this is a low here. Actually, that's the low. I'll give y'all a better demonstration. You guys could actually take a picture of this and just review it, right? Just a low, lower low. So cover over here, clone. You have a high, right? Clone. And then we have a lower high. Lower high. Right? Lower low, low. Once again, and we have a lower high. Okay. So if you guys want to take a picture of that, right? So this is what these are the points that we look at to determine uptrend, right? We start spotting higher highs, right? Higher lows, higher highs, higher lows, higher high. And then we also start spotting the lows and lower highs, lower low, lower high, and so forth, right? And lower low at the bottom here as well. Okay. Does everyone understand that so far? We have a question. Got it. Okay. All right. So that is what really that is really a representation of what we consider an uptrend and a downtrend. Now I'm going to show you how you can draw this up on the chart to help predict your next move, and I'm going to show you how you're able to determine if price is now on an uptrend or a downtrend, right? So before we go on the chart, these are the confirmation, right? That's for an uptrend and a downtrend. So let's move this to the side over here, right? And confirmation one is that you need price to break that downtrend line. For an uptrend, you need price to break the downtrend line. You need price to break the swing high, and then you need price to retest the structure or outside that trend line, right? So let's look at that on the live market and go by step by step, right? Okay. Let's find a trending market. Find a trending market. Okay, we can look at here as a trending market. It's a small market. We're on a 15-minute time frame, right? Small market. Now, right here, let's look at this. Let's look at this point. We have a high point here, right? And then we end up having a low point here, a lower high. So those are your two first data points, right? You connect those points and then drag it out in the future, right? And usually I go from wick to wick. So let's zoom in on that as well to make sure you guys have a good understanding of that. So we look at this from when you draw the trend line. Some people may mention drawing trend lines from body to body. I personally look at wick to wick. The reason why I look at wick to wick areas are liquidity areas, right? So those are point of areas that price may go out to go out more to in the future opposing to the inside, right? So let's review. So as you guys can see, first we have a high point here. We have a high point, right? And we have a low point right here. Then we have a lower high. Sorry, guys. A lower. I'm just put LH for short, a lower high right here. And this keep going down as, you know, keep looking, you have a lower high, right? Lower high. And then we have a lower low, right? Over here. Lower low, right? So right here, you can see that price is going on a downtrend. We have a high, a low, a lower high, lower low, a lower high, lower low, right? Lower high, and then coming all the way back down here, you have a lower low, lower high, and it just keep going, lower low, right? So what I want you to understand is that you can see how price is respecting this trend area, right? As price going down, it's respecting it, and then respecting it, it keep going down, right? So that right there is a downtrend. Right? It's very simple. It's not really a complicated thing. I don't want to say it's very simple. If you're new, right, it may be complicated, but as with practice, it will start making sense. Okay, but that is a trend line. So now let's look at a confirmation, right? As now we can see that price, if we move over, price end up starting going up, right? We could start seeing this is an uptrend, right? Price is going up. Now, how can we determine, right? This is a downtrend over here. How can we determine how can we determine when price will reverse and start going to the up direction, right? Now, let's review that. Before actually scratch that, guys. We're gonna review that, but before you get into that, I want you guys to understand that, you know, traders use trend lines to help dictate points of entry. Okay, so whenever you see the price pulling back to that trend line area, right? These are the first data point that you need to have two data points first to establish a trend line. That's one, right? But whenever you see price, let's change that color, make that black, thicker so we can all see it, right? So whenever you see price pull back to that trend line area, is an area of reversal. So as you can see over here, price continue to go down. As price pulled back to or close to that trend line area, we spot a reversal. Price came over this reversal area again, it reversed and rejected and pushed back down. Right. So these areas are areas of interest that traders look at, right, in order to enter the market. Okay. These are areas that traders look at in order to enter the market. Right. Okay. Now, it's the same concept for a downtrend, right? On the market. When we look at a downtrend on the market, let's move this out the way for a second. Just delete that. The first thing we want to look at is the data points, right? The first data point we have is right here. And we have a second data point right here, right? And then we have more data points going up. So drop the trend line, all we need to do is look at those first two data points, right? From here to here. And we could start drawing the trend line up, right? Now, remember when I mentioned that trend lines are subjective, right? The market, guys, I want you guys to have this in your mind, in your head. The market will never be perfect, right? As these diagrams that I drew up here. You never, you know, sometimes you could have a perfect setup, right? But 90% of the time, the market will never be perfect like this. The market is not a straight line, as you can see, right? This is just an example of how to determine an uptrend and a downtrend, okay? You can see over here for the downtrend, the market is not perfect. At this point, it never touched the trend line. You rejected. Over here, it came a little bit outside the trend line and it continued going down, right? But how can you, we're going to talk about later, how can we just, how can we understand when, how can we determine that this move outside of the trend line is not a confirmation that price wants to go up? It's still in a downtrend. We're going to discuss that, right? That's going to be a checklist to help us determine when we can look at the market to understand if it's going to reverse or not. Okay. Now, as mentioned, trading is subjective. So, things are not going to be perfect. As time go by, this could be a trend line initially starting, correct? This could be an initial trend line. But as time go by, right, you will notice that, price is not going to be perfect and you may have to adjust it to something like this, right? But for the sake of this trading, right, let's stick to the first two data points, right? Because this is still not a bad trend line. It's not a bad trend line, right? But understanding that, you may have to adjust your trend line like this, it will help you get better entries and early entries, right? Help you understand that the market is reversing as well. But let's look at the first two data points, right? So once again, we have a data point right here, data point here, and we just extend it, right? And this is a future area that price, this is a future area that price could hit and then decide to reverse and go up, right? In this example, we see that price did not reverse, it continued going down, okay? So once again, if we look at this, we can start seeing we have a data point, right? A high, right? A higher low, a higher high, higher low, higher high, right? Higher low, and then a higher high, right? So we make that green so everything lined up. So let's mark that up. We have a low over here. All right, we have a low. It's going to be an uptrend. We have a low over here. A high. Higher low. Oh, what did I just click on? Okay. You have a higher low here, right? Where that number 2 is at. It's going to clone that and move this here, higher low, right? On that here, higher low. Higher high, right? Let's look at this. This way you guys can understand what's going on, right? You could take every time I'm marking up the charts, guys, you can always take a picture for yourself, right? As a reference, right? You can feel free to take a picture for yourself as a reference. This way, you look at the diagram over here, you can take a picture of that, right? 5, 4, 3, 2, 1, right? And then you could review it on the chart, right? You could take a picture of this markup on the chart and look at the diagram and look at the chart, right? And understanding what's going on, okay? Right, so once again, whenever price, comes to this data point, right? So this trend line, this is an imaginary line, right? That we're drawing up, right? We can expect price to reject off of it and continue going up, correct? Okay, now that's just understanding what a trend line is, right? It's very, it's a quick breakdown of it. But today, as I mentioned, we're going to be discussing we discuss how to draw the trend line, right? And how to draw a trend line. The first thing is that you want to look at the first two data points, right? If you start spotting if you have a high point and you start having a higher low, those are the first two data points. You draw it down, and then in the future, you can predict if price hit this area, it's going to reject and continue going down. Same thing for an uptrend, right? How to draw up that line. You look at the first two data points, right? You can see that you have a higher low, right? This is the low, the very low, and then price went up and came here, give us a higher low, right? At this point, right, you can drop a line and predict that whenever price pull back to that line, it's going to reject and continue going up, right? Now, are you going to solely rely on the trend line? No, there's going to be other confirmations of why you enter this trade, but that's not this training. This training just based on, we're just focused on what trend line is as a whole, okay? Now, let's look at this over here. Confirmation of a trend line, right? Delete this arrows. Let's clear this up a little bit. Now, let's look at an uptrend. This is an uptrend example over here, okay? So right here, this one right here is a downtrend example. And let's look at an uptrend example. Right? So let's look at a diagram before we even continue on the chart. So what we're looking for, right? Say this is a downtrend, price is coming down, right? While price is coming down, we have these high points, right? Touching that trend line like this. Price came down here, right? Now we're looking for price to go up, correct? So let's make this black. So now we're looking for price to continue start going up this way, pretty much, right? We want to know when price is going to go up here. So how to establish if price is going to go up to the upside, right? To establish an uptrend. First, we need this to happen. We need step one, price must come and break the trend line, right? This black line is the trend line. We need price to come and break that trend line. That's the first step, right? Price breaks the downtrend line. This is the downtrend line, the black line, and we need price to break that. That's checked. That's the first step. The second step is we need price. We need price to break the swing high. So if we look at the swing high, right? We have this as a high, a low, lower high, lower low, lower high, right? That's the swing high. So you could draw a line across there, right? Now, I'm going to go over support and resistance in another training. And I'm also going to go over supply and demand, right? So as supply and demand is typically those swing high, swing low areas, and that's mentioned, that's going to be mentioned in another training. All right. So once price break that trend line, we're looking for it to break the swing high, right? Once we get a break of that swing high, it's an establishment of prices getting ready to go up for an uptrend, right? Now, once we get that, that's checked off step two. That's good. Now, step three is we either going to have a retest of this structure to continue going up, or we're going to have a retest. Sorry, guys. Or we're going to have a retest of price coming down here to outside of this trend line, right? Then continue going up, right? And what's the beauty, right, of this example here? Let me use a different color, right? So we understand. The beauty of this example here, let's use a blue, right? Of this blue markup here is that now you're going to start having, you're going to be able to have what? You're going to be able to have these data points. First data point, second data point, right? And what that means? That means that now you can start looking to connect your data points for price to continue going up as well, right? Or you can have first data point here, second data point here, and now you're looking for price to continue going up, right? So that is the establishment of an uptrend, right? Once again, we need price, right, First step, we need price to go and break the trend line, right? Price breaking the trend line here, the purple, right? Price breaking the trend line here. That's the first step. Second step is to break the swing high here. Price breaking the swing high here. Third step is either to retest, right, down to this area, right? And this is usually going to be a 618 retest, guys, right, on the fib level. And I'm gonna explain Fibonacci in another training as well. Or it's going to retest on top of this structure right here, right? These are the two things we either going to look for, and that's going to establish the uptrend, and we could start looking for price to go up. Okay, so let's look at that on the chart. Let's look at that down here on the chart. Let's clear this up a little bit. And we're going to also go for the establishment of a downtrend, okay? Let's look at this on the chart. So we're looking at an uptrend over here, okay? So if we look back over here on this chart over here, if we start putting a line, one second, we start putting lines across these areas, right? So we're looking at the most previous high, right? So where's the most previous highs? The real swing high, right? This is the retest to here, but the real swing high would be this structure here. This is the most previous high right here. So all you're going to do is stretch this line across, right? You're going to stretch this line across. I can, what you could do is put a horizontal line, right? How you get the horizontal line? You go here instead of right here, horizontal line, right? So you're just going to put a line right there. All you're going to do, we're going to make that color. Yeah, we could leave it blue, right? But I'm going to thicken that line so we can see it. Now, step one, right? Let's review again. Step one. I'm going to make that red again so we can see it clearly, right? But let's delete that. Step one right here. Price must break the downtrend line. We say that this is a downtrend, and we say that this is the downtrend line, right? This black line. Step one, price breaks the downtrend line here. Okay, good. So that's checked. Step two, price breaks the swing high. We established that this area is a swing high, right? From coming down to the downtrend. This was that swing high. So price has to break it over here. That happened, right? Step three, price retests either the structure, which is this blue line, or it retests down to the bottom again before we look to start taking it up. Now look what happened. Price came down to this area, right? Now, one thing I want you guys to note is that price never broke this low. Okay, the previous low, which is over here, price never broke it. If price is equal to or higher, that is perfect, right? And this is a little bit higher. It's not equal to, but if price is equal to or higher, right, it's perfect. You ideally want price to be higher, right? Price to be higher is better. Price to be higher is better. And I'm going to explain why I say that in my smart money trainings, right? But price being higher is better. Okay. So as we can see, you know, when we're looking at downtrend, we see these lows get broken and we start having what? Lower lows. This high got broken, right? So we established a new high, beating this high, right? But we never broke the low to create a lower low. So now that established an uptrend, everything lined up, and this market is now looking for reverse. Now look what happened, right? Price started, you know, you can look at these points as data points now. We start having what? A higher low over here. Now you can start looking for price to start even continue going up and do its thing, right? That is how you can determine the direction of the price of the price is going to start going up or down. Simple as that, right? I hope that makes sense to everyone. Hope that makes sense to everyone. All right. So now we're going to look at a downtrend, right? Let's look at a downtrend. We're going to look at a diagram for downtrends. right? Once again, like over here, and then we're gonna go on the live chart, right? First, I like to explain on the diagram to make it very simple for everyone, right? So let's do that. If you have any questions, please ask, right? I will try to get to all the questions. I don't want to keep anyone on this call for even over an hour, right? I want to keep it very simple and clear, right? I don't want to use any strong definition, strong words to confuse anyone. I want to keep it very simple and clear. Okay, right? So let's look at let's look at a downtrend, right? So this is a uptrend, right? Price is going up. It's an uptrend line, right? We have price, going up, bouncing off these levels, right? This is an uptrend. Now, make this black actually, so we understand. So this is an uptrend now. So we're looking now to confirm a downtrend. So the first thing to confirm a downtrend is we need price to break. We need price to break the uptrend line, right? So we need price to break this uptrend line, which is that black line. That's step one. Step two, we need price to break the swing low. Where is the previous swing low? We see this is the high. This is the previous swing low before we have that big high. Swing low and swing high, right? Let's mark that up. Swing low. When I say swing low, that means the lowest point before price reverse up. Reverse upwards, right? Or buy. Swing high means the highest point before price reverse downwards. Right, so understand when I say swing low and swing high, this is what I mean. Okay, guys, take a picture of that as well. So when we look at the swing, when we say swing low, we can see the right hand number 4. This was that swing low, right? So I'm just going to change the color for that one, and I'm also make it black, right? So make that back red. Leave that. Okay. So first step, we need price to break the trend, which happened over here, right? That's checked. The uptrend line. It has to break an uptrend line, right? Second, we need price to break the swing low. So price come down and break that swing low. Once it break the swing low, automatically establish downtrend. I want you guys to understand that. Establish downtrend, right? But we're not just talking about establishing a downtrend. We're also talking about confirming a downtrend, okay? This is a confirmation checklist, right? But once it breaks the swing low, downtrend is established. Once it breaks the swing high, uptrend is established, okay? So next we want price, that's step 2 meet. Once one step, and after that, we need price to either A, retest the structure, right? Or retest up here to start going lower, right? So we either need to retest that structure, that black line, to start going lower, or retest up here to go lower. Now, what's going to happen? We're going to start having, this is the very high point, then the lower high, and then price, we could start drawing trend lines like that as well to take down. Does that make sense, everyone? Right? If that doesn't make sense, let me know and I can review the diagram, because the diagram is the simplest form. Okay, yep, okay. Right, so now let's look at that now on the actual chart, right? Let's go back to this downtrend we have over here. Let's go back to this. Well, this is not a clean example, guys. Okay, this could work. This could work. Not the clean example. It's not a clean example. It's not a clean example. I'm going to review another example of the downtrend, but since we're here already for this downtrend, we're going to explain the confirmation for this as well, right? So let's draw up a trend line with this. All right, let's draw up a trend line like this. So we're looking at these data points. We're drawing this trend line. We're drawing it. We're drawing it. We're drawing it. Boom. That's the trend line. That black line. Hold on. Right here. Right. That's the trend line. Right. So I'm gonna just delete this. I don't have to delete this, but let's just clear this up a little bit so we have a nice understanding of what's going on. Not the best example, right? But let's look at this over here. So let's look at this. So when we're looking at this trend, right, we could start seeing that we have this low. There's an uptrend, low, higher high, low, high, right, low, and whatever. So just not the cleanest example, right? It's not that clean, right? But nonetheless, let's just look at this. I'm gonna look for a better example after this, guys, right? So step one, we need for a downtrend, right? We need price to break the uptrend line. So this black line is the uptrend line. So look, price breaks this uptrend line, right? That's step one. Let me just delete this for a second, guys, right? So step one, we need price to break the downtrend line. So that right here, this right here is that breakoff line. Let me draw it better. So as we can see, price came here and break that line. Right. Step two, right? Well, let's look at the swing low. So if we go back over here, guys, we can see that price came here, right? That's also a low. Let's make that green. And then it came back up here and give us even a higher high up here, that wick right there, right? And once price is above this trend line, guys, we're in an uptrend. We're not even looking for price. We're not even considering anything above here, this black line, a downtrend, right? So when we start looking, we have to see that this low is the previous swing low right here. I'm gonna draw a line across and I'm gonna make that color black as well so we can see it, right? Actually, I'm gonna leave it green so we can actually see it. Let me just put it back green, right? This area, right? So look what happened. We have price breaking this low, right? It end up retesting the structure, opposing to retesting in here, right? Not just in there. It shouldn't go back inside the trend, but opposing to retesting out here, it retests the structure here, and then it came. No, hold on 1 second. Let me just my drawing tool, guys. Give me 1 second. Let's just clear this up so it looks better. Right. Let me just clear this up so it looks better. Right. So anyways, so step one, we have price breaking the trend line. Right. It broke the trend line over here. Step two, we have price coming over here as a retest. Right. And it comes over here as a retest to this green structure over here, to this structure over here. These areas, this nice area over here. Right. Price came as a retest to this area. Right. So it breaks it, retest the structure. So if we go back to our diagram, right, as mentioned, price either, let's use another color. Let's use purple. Price either gonna break the trend line and the swing low and retest the structure and go down, or it's gonna break, or it's going to, let's use another color. Let's use blue. Or it's going to break the trend line and the structure and then retest up here and then go down, right? So it's going to do one of these two things here. Either the purple line, right? It's either going to do the purple line or the blue line, right? It's either going to break, retest the structure and go down, break, retest above the structure and come back down. But what I want you guys to understand is that the retest is still outside this trend line, right? It's still outside this black line. So if we go back down, right, I don't know if this is a lot of mess. I might have to clean that up, right? So what I want you to understand, price either going to do these two things, right? This red line is going to either, the blue line is going to break, right? And go above the structure back and then continue going down, or the purple, which it actually did, which is going to break, retest the structure, which is the green line, and then continue to go down, right? But once you get a break off the structure outside the trend line, guys, a downtrend is established and it is confirmed, right? So once again, we had a break of the uptrend line. We have a break of the swing low, and then we have a break or retest of the structure, right? And to continue going down. Does that all make sense, guys? Right, this is not the best example because of how the structure is, but you know why I continue to show you guys this example, even though the structure is not perfect, because I want you guys to understand trading is not perfect. Trading, it will never be perfect. The market, and when I mean trading will never be perfect, I mean like the market will never be perfect, right? So if you're not able, you got to start like spotting these things with your eyes, right? And understanding what's going on. So let's look for a better example, right? Of a downtrend. Let's look for a better example of a downtrend. I'm looking for a nice trending market. Just carry this over with us. And we're on the 15 minutes, so I'm just looking for a quick, nice trending market, right? A better example. Like even over here, this is not also an example, right? This right here, that's not even, I'm looking for a cleaner example. Let's see. Let's go back over here too. This is actually, I just saw a nice example. I just saw a nice example. All right, this is a nice example right here. And I'm going to show you guys how trading is not perfect at all, right? And you got to understand what's going on in the market. Look at this. We have an uptrend right here. First data point, second data point right here, stretches across, right? Boom. So as we guys can see, we have market going up, down, up, right? Now, but I want you to understand now, look at this, mark up these lows, right? Just look at the lows. So you want to look at the previous, before we get to the, before price coming down here, let's look at the previous low, which is here. That green line right there, just make it black, right? That's the previous low. Now look what happened, right? Price breaks, let's use another color instead of purple, right? Right, price breaks the trend line, right, for a downtrend, because this is an uptrend, this green line, uptrend, right? Check. Now, look at this now. Price retest, right? You can look at that or this, right? Either or. Price retest, right? Price retest. So it did step 3 before doing step 2, which is okay, guys. Price retest, right? The structure. Now look what it started forming, these higher lows, right? Look at that. Now the confirmation for that is the break of that black line. Price then came and break it. That is a good example of price now going for a downtrend, right? As you can see, price absolutely came down, right? 40 pips. And this is just a quick example on a smaller time frame. Obviously, on the high time frame, it probably would have looked cleaner. I should have did this on a higher time frame, but nonetheless, that is a confirmation for a downtrend, guys. I want you guys to understand that step 3 and step 2 are interchangeable. Okay. Right. Yep. Okay. Good. So step 2 and step 3 are interchangeable, but as long all 3 steps are met, you are good to go. Right. So as we can see, the first step will always be the break of the trend line. Right. But as we can see in this step, we had a retest outside the trend line, or if you want to look at this area as a retest, whatever. Right. And then the third step, and then the second step, which became the third step, broke off the swing low. Right there, we get a break, right? you would say you short this position, right? And this is for someone that you don't even not even great at trading, just want to understand the basics and could get in the market and start trading and be profitable, right? You go, you want to go for that about 20 pips, right? Target. And as you can see, this trade drop about 40 pips. That's a 1-to-2 ratio. So if you risk $20, you're making 40. If you risk 200, you're making 400, right? If you risk 2,000, you're making 4,000, right? Simple as that, guys. It is that simple, right? That's simple. Now, you may want to understand why is price didn't continue going down. In another training, right, I will talk more about supply and demand. These are key reversal points, right? But nonetheless, that is how you confirm an uptrend and a downtrend, right? And you could end up, you could start trading this market. Look at this over here. Let's look at an uptrend one more time. Let's look at an uptrend. So we can see that price is on a downtrend. We have a first data point here. Look, second data point here, right? But I'm not going to use that wick. I'm going to continue coming down here. And that's going to conclude us to a next segment, right? So once again, high, low, high, low, high, low. Look at that as a high right here, right? Make that green. And then we have another low, boom, right? Over here, right? So now you just want to point out your previous high, right? So where's your previous high? The draw line there is right. This is your previous high right here where my mouse is at. Just draw a line across that area, right? You draw a line across that area. My line's not that straight. Let me just straighten this out. Right. So look what happened. Establishing an uptrend, all right? So first thing, price needs to break the downtrend line. So that black line is downtrend line. Boom, price broke it right here. Second, price must break the swing high. And as I mentioned, this is the changeable number, step 3. But anyways, price broke the swing high up here. That's check. Step 4, retest the structure or outside the trend. The retest outside the trend. As you can see, this outside the trend line. And look what start happening. You now have these data points, right, where you can now potentially wind up in the future like this. Right? But anyways, now once that happened, this is an establishment for uptrend. As you can see, price went all the way up here, about 60 pips from that area, right? That's an establishment of an uptrend. Now, now in this training, we're not going to talk about how to enter and stuff, right? That's going to be another training, but this is what confirmed an uptrend, right? Confirmed an uptrend, right? So the break of the swing high established the uptrend, but that retest here confirmed the uptrend, right? Because what if this happened? It break here, right? But then price continued coming down. Because the fact that it break this low, we can say this market is still in a downtrend, right? But once we don't get a break of this previous low, right, and market is above that or equal to, we're good to say it's uptrend. I hope that makes sense. All right. Okay. Okay. So let's go. I don't want to, how long we've been recording. I don't want to go too long. We have 7 minutes, right? So let's review the last thing, right? So once again, swing low equal the lowest point before price reverse upwards. Swing high equal the highest point before price reverse downwards, right? So when I mentioned swing low, swing highs, hope that makes sense. So you guys, right? So I'm just gonna move this over here because we finished with that. Move this right here. If anybody want a picture of all of this, right? Feel free to take a picture of that right there. Good to go. I'm gonna give you a few seconds. 5, 4, hold on. Right, 5, 4, 3, 2, 1. Right, 5, 4, 3, 2, 1. Okay. All right, so you guys have this. Now, the last thing we want to talk about is understanding the trend and the manipulation. So now this is important. What I want you guys to understand is that the way, banks control this market, right? It takes 10,000 lots, I believe, to move the market 1 pip, right? Our little 10 cents dollar lot, $10 lots is not doing damage to the market, right? Stop having this idea that we control what's going on in the market. We control You see this, I don't know if you guys can see this red dot, right? We control we control this much in the market, right? While this entire white background is how much the banks, hedge fund, and the central banks control the market, right? We only have we don't have even we don't even impact the market, guys, right? So I want you guys to understand that. Now, I want you guys to look at this area. When we trading, right? Banks understand that, and this is why we're going to go into smart money next, right? I don't want to keep teaching you guys these retail trading things. These are important because you need to understand them to trade, right? But I don't want you guys to have too much of a retail concept, right? Because and trade like the 99%, and that's how you fail, right? So now we have 5 minutes. So as a retail trader, right, they're taught, when price hit the trend line, you enter for the sell, for a downtrend, and you just trade this trend line, right? But I want you guys to understand, whenever someone enter off these areas, right, where did the stop loss go? So if we enter here, right, short means sell, price going down, long means buy, price is going up. So we enter for sell because we expect price to go down here, for example, right? Our stop loss is probably at these highs or whatever, right? Somewhere there, whatever. Now, whenever we trading, right, someone trading, I mean, there's stop loss is there. What I mean, money is sitting there, right? So whenever somebody enter here again, right, here again or whatever, that means, their stop loss is probably here, whatever they're taking out. That means money is sitting there again, right? So what happened here? Someone may have entered here, for a short when price hit that line again, right? Thinking, okay, I'm gonna be good to enter here, right? Put my stop loss, 20 pips or so right there, right? And what happened is that the banks pushed the market a little higher and took out their stop losses, collect their liquidity. Now, what also happened, right? Retail traders are looking at this in the sense that, oh, the trend line is broken. Look what happened over here. It's broken and it retests outside the trend line, right? Right? I want you guys to see this. Let's zoom in, right? Price broke the trend line and retest it, right, outside, and then start pushing up. What you think these retail traders and these basic traders, YouTube traders are doing? They're saying, okay, this happened, so you know what? We're gonna buy stop loss at this low, 6 pips, and we're gonna look to take it high, right? Because they trend traded. And look what happened. This was a manipulation, and the banks literally took this market all the way down here. Right? The banks literally took this market all the way down here. This is why we need a confirmation. Now, if we were to look at this, right? If we were to look at this and just delete this blue line, if we were to look at this, where's our swing high? Our swing high is right here, right? So if this is our lowest point and this is the trend line, this is why the confirmation is important. If we would get a break and a retest here, before we look for a buy, we need price to come and break where that swing high to establish and confirm an uptrend. As we can see, price didn't do that, and look what happened. Price continued to sink, right? This is why that confirmation is important, guys. You guys gotta understand, trading is not about gambling, right? You have to have an investor mindset, right? Every dollar you invest is important, right? Don't just jump in the market and say, you know what, I could risk $2. It's no problem. I could risk $5. It's not a big deal. Those $5 add up, right? Those money add up, right? So, you guys got to understand the rules and stuff, because banks are always trying to sip us out in the sense of trying to make us lose, right? They collect our liquidity to take it lower and stuff like that, okay? So, you may think, banks are it's out to get you. In some sense they are, right? Because they collect your liquidity to push the market, the other way. But if you understand what's going on and you follow the rules, you could never be sifted out, right? Even though, look at this institutional candle, this big drop happened, right? Most retail trader be like, oh, it's a sell, going in. Let's get in for the sell. Let's get in. Oh, look what happened, guys. It pulled back here, right? It pulled back here. And look, we start having a lower high right here. Let's take it for a sell. Let's take it for a sell. When really, guys, if you look at the market, you see that price just broke this swing high over here. And this was just a retest, and price is looking to take it up, right? So you guys got to understand, don't get tricked out by these candles or whatever. Understand the rules and follow the rules. Trading is not supposed to be difficult. This is why I give you guys the trend rules, right? Simplicity, right? We're not looking to overcomplicate it, because guys, I could go, like I said, I will go into a smart money training, right? We have 1 minute, right? And I could talk about institutional candle over here and this wick, and we could show you, I could get the wick entry, right? Risking like 5 pips, catching all of that profit. We could get into that, right? But we're not going to do all that. We just want to understand the simplicity of the chart, right? These are the basics, right? If you understand these basics, guys, you will be profitable in the market. Okay, you'll be profitable in the market, right? Once again, let me just clear this up a little bit, right? If you guys want a picture of this, feel free to do so. Right, let me just I don't want to cramp everything, right? Simplicity on the chart, right? You guys want to take a screenshot, right? 5, 4, 3, 2, 1. All right. Any questions? You guys have any questions before I go? That'll be the training for the day. If you have any question, actually just reach out to me. You know, if you want to have a one-to-one, reach out to me and we could sit down. Okay. So thank you guys for coming on. I hope you guys learned something today, some valuable information. Next training, I will go over how we can profit off this, right? Retail traders and people out there tell you to stay away from consolidation market, right? These markets right here, the sideways market. Guys, I'm going to show you how you can profit off this market. Okay, no problem. You're welcome. You're welcome. Have a wonderful day, everyone. See you guys next time.